moment, and then we'll start trading for this Tuesday morning. Remember, please, we are coming off a 7-day winning streak that's taken the Dow firmly above the 17,000 level. We are going to be down at the opening bell, which is now, trading has now started. We're going to be down at maybe 100 points. Let's see how we go when everything's opened up. Right now, we've opened up in 10 seconds. We're down 45 points. Here to analyze, Ashley Webster, Liz McDonald, Todd Horwitz, and Hillary Kramer. Todd, to you first. As you know, stocks have been on a tear. Do you think we hit 18,000 on the Dow Industrials by the end of this year?
No, absolutely not. I think there's no chance we hit 18,000 by the end of this year. I think we may make a little bit run higher from here, but I think when it's all said and done, the highs are in for the year, and I think we end up working our way lower from here.
Okay, where is he wrong, Hillary Kramer?
I think we go higher from here, Stuart. I mean, the air had already been let out. There's a lot of good momentum behind us. I said that with about quantitative easing.
Where?
You know, we have the Fed behind us. The Fed is nowhere near ready to tighten. We may even have negative interest rates. That's going to bring us higher. And earnings expectations are so low, we can only go up from here. Let's take a look and see what happens to General Electric on Friday. Let's see where we are with the big financials. If they can hold out, even with maybe rates not going up, we could do well.
You've got to get back into this, Todd. You're shaking your head. What's wrong with that analysis?
Well, first of all, the only growth we're seeing. The only growth we're seeing is company buybacks and free money from, I don't want to get buzzed, so I won't say it, but free money from the central banks. Have we totally lost our mind that everything is only about free money and what we can get instead of really wanting to grow this country back to where it should be, where we have actual growth and real jobs? Are we really happy with $8.50 an hour jobs? I don't get it.
Okay, we hear you both sides of that fence. I'll tell you what's happening now. We're almost 2 minutes into the trading session, and the Dow Industrials have gone down 90 points. We figured it might be 100 points down, but we're right down there at about 90 points on the downside. Okay, let me move on to, I'm looking for the biggest percentage losers on the Dow Jones average at the opening bell. There they are. That's what we've got for you. J&J, United Tech, Caterpillar, Visa. Those are the biggest percentage losers. Only J&J is on the downside. They came out with earnings, I think they were out earlier this morning. There's not huge declines there. No. So come on, Hillary. You think we're going to be higher by the end of the year. Why are we down 80?
We're down because of news out of China. Exports dropped double digits, and that's really important. Now, imports dropped single digits, but that shows a lot of weakness, and it's really weighing on other countries as well. Australia, New Zealand, Asia just really had a bad night. And then in Europe, you know, it just really looks bad in the UK. No inflation. We didn't see a strong number out of Germany on the confidence number.
So Johnson & Johnson, which is a huge consumer products company, is interesting. They beat earnings. They beat the expectations, raised their outlook, and let the stock is still moving on. I'm wondering whether that's because the bar is so low, people are not buying into it.
Right. Warning signs, credit rating agencies downgrading more companies like the most since the financial crisis. Also, the 3-month T-bill, wow, what a red flag that was. Went to zero for the very first time, the 3-month. That shows an exit out of equity funds into money markets.
You know, I'm a grave risk of getting the buzzer. I know I am, but I've got to be in my bonnet about falling prices, deflation.
Yeah.
We got news out of Britain today. Okay, that's not terribly relevant for America, but news out of Britain, prices are falling in Britain. Now, that's something to make a note of. That's not a positive for any stock market anywhere. You get deflation, you get stocks going down.
You get Japan.
What do you think, Hillary? Are we in a profits recession, or what do you think?
I think that we're still the strongest of all the countries around the world, and Europe is just so weak right now. And then the oil news.
You're very defensive. I can hear it in your voice. You are defensive.
Just see those companies that are dependent, you know, domestically and make their money domestically are going to do very well, and even some of our big industrials are going to bounce back.
Todd is itching to get back into this. All right, Todd, you got 20 seconds. Go.
Deflation is no good. The falling commodity prices for everything falling does not help anybody.
Well, you got it in. I mean, we did hear what you got to say. All right, now this. I want you to look at the share price of AB InBev and SAB Miller. They got a deal. They're going to get together. If they do get together, they will control 70% of America's beer market. 70%. Liz, That's a monopoly. The regulators are going to go all over
Yeah,
this.
it's also a third of the world's beer market. Even though the craft brewers are coming on strong, here's where the play could be. The U.S. antitrust guys at the Department of Justice could say to this company, if you merge, you got to get rid of your, your Miller Coors joint venture. Yeah. So that could help save the deal if they get busted up by the regulators.
AB is very confident that they'll get it through because they pay Miller $3 billion if the deal doesn't go through. A lot of money.
That's
one point worth
yes.
making, when the market went down, boy, the antitrust guys at the Department of Justice, they went silent. They went quiet. So when we're in recession or a market crack up, you don't hear from these guys complaining about mergers.
That's interesting. Dow Industrials down 80 points as we speak. Check Twitter. We now know how many jobs they're going to cut. 336 doesn't sound like much, but that's 8% of the workforce. They're working themselves up for a sale, aren't they, Hillary? Any comment on that?
That's where it's heading, but it'll be a sale out of desperation. I mean, they're just losing, and now we're seeing who the winners are, who the losers are. Facebook is clearly the winner in the online social media world.
Isn't it extraordinary? Everybody knows Twitter. Every news outlet talks about Twitter all the time.
Yes.
You're always getting tweets from this person, tweets from that person, but they can't make money out of it.
That's the issue.
And the stock languishes under $30 a share despite cost cutting and a new CEO.
Exactly.
There you have it. There's a transportation company, Ryder is the name. It's cut its profit guidance. So watch out, Nicole. How bad is the stock reacting?
And it really is an economic indicator too. Stock's down about 7% right now. They have commercial vehicles, trucks. One of the reasons why they didn't do as well is because they actually sell those, the used vehicles. They didn't sell as many as expected. They also had a lot of out-of-service vehicles. They do a lot of short-term rentals for businesses. They said that the demand for rentals have been doing well, but out-of-service vehicles hurt their numbers as well. So they cut their guidance. Stock tanks, number one loser in the S&P 500, and weighs on that transportation index as well.
That's a tough story for you there, Nicole, but you got it out there, right? 5 o'clock every weekday morning. Tune in to the Fox Business Network. Lauren and Nicole will take you through the very, very, very early part of the day. JP Morgan, that is the biggest bank in the land, hoping to save a lot of money. They're making some employees pay for their own work phones. Hey, Todd, you got anything to say about that?
Well, I mean, I think that it's the more showing how well everybody's doing and how the growth is. I mean, the banks have had a lot of trouble because they can't make enough money. The banks are not able to loan out money because of the low interest rate, because of the Tier 1 capital, because of Dodd-Frank. They're not able to loan out enough, so they're really not making as much money as they were. And you take away their trading desks, which we've been doing, and it even cuts their profits. So all they're doing, they're like everybody else. They want to cut corners and continue to stick it to the employees. And I think that's what you're seeing.
Let me throw this out. Is there a liability thing going on here? You cut costs by making some employees get their own phones, but are you also evading liability? Because if they had work phones, maybe they've got a liability problem. You're ruffling your brow.
No, it's an interesting take. I didn't realize that. You might be right. You know, and the BlackBerry, though, even though it's secure, I think this is J.P. Morgan facing $58 billion in annual operating costs. They're trying any way they can to make that bottom line look better in a beleaguered profit bottom line market.
You think I think
it's extreme to have your employees pay. Well, yes, I think it is, but just the idea that you have to pay for your own work phone, get your own plan.
I agree with you, Stuart. There has to be something more going on here.
Okay.
If that's the best they can come up with, it's not very good.
How about the price of oil? We cover it every day, but it's not been doing that much. It's still in that mid to upper $40 a barrel range. Get this. The International Energy Agency says the oil supply glut will stay with us all the way through next year. Come back in again, Todd, because you're in the trading pits. Are we going to get that leg down for oil below $40 a barrel that everybody's been waiting for and talking about for a long time?
No, I don't think so. I think that oil has probably found the level probably around 44 was probably pretty close to the bottom. I think that the people that have been talking about trying to tell you they want to push it down have actually been starting to buy oil. JP Morgan, Goldman Sachs, all those calls are meant to kind of force people to get short so they could actually step in and buy oil. I think oil is probably stuck between 44 and 50, 55 for the next number of months here. I don't think it's going to be a major move down, and I certainly don't think you'll see a major move down.
Before you go, give me 20 seconds on the end of the world that I think you believe is coming.
I love the world. I don't think it's the end. I think we need to make some serious changes, and some serious things that need to be done to make it better again. But I think the world is great. I love it. I'm glad to be here and glad to be talking to you before I get buzzed.
Well done, young man. Well done. I'm not making light of it. I'm very interested in some of these scenarios. Here's a sign for you, maybe a sign of the times. Now you have to read Playboy for the articles. No more nude pictures. Hugh Hefner says that naked women are passé.
He's right. He's right. Look, the circulation of Playboy back in 1975 was like 5.6 million. Today it's 800,000. And that's the reality of the internet world. If you want to look at such images, it's just one click away.
Yes, indeed. Exactly.
So why bother buying a magazine?
So now you've got to read it for the articles.
Exactly.
Liz, comment?
Well, I think it's going to make Playboy a boring magazine, honestly. It will. And, you know, I'm not surprised they didn't make this announcement during the Pope's visit. I think they waited for the Pope to leave town. You know, so do you really read it for the articles and the cartoons? Yeah, they have good articles and cartoons. But let's face it, I think this is not a good sign for Playboy.
All right. That is the last word. Thank you, everybody. Hillary, Todd, one and all, thank you very much. Check the big board. We're just